Okay, so we're going to get started. Thanks everyone for joining tonight's webinar. The title of tonight's webinar is Mastering HOA Money Matters, Funding Your Association's Reserves Effectively. And this might be something that is of great interest, not only to us as a management company, but also to the board members of each association. And today's webinar, we're going to tackle three main objectives. These objectives are: what exactly are HOA reserves? What are they used for? And also, why is it crucial to have these reserves, and as well have a reserve study performed within the community to ensure financial success for the HOA, not only in the short term, but also for many, many years to come. So let's get into understanding the role of these reserves. What exactly are reserves? Well, the reserves for the HOA, it's a budgeted line item within the HOA's yearly budget, in which funds from the operating account, which is the day-to-day operations account where the association pays their vendors, collects homeowner dues, funds are transferred regularly out of this account into a secondary account. And what are the purposes of transferring these funds to this secondary account? Well, it serves an extremely vital function. It's dedicated to the financing of major repairs, replacements, upgrades within the community, especially to the common areas and the common elements. This can also be used for projects involving roofing, siding, painting, pool-related expenses, building repairs, repaving roads or sidewalks. And as you can see, these are massive undertakings that usually cost the association a lot of money. And having these reserves in place long before these expenses occur is extremely vital for the success of each association. And something that allows the association to plan for these projects is having a reserve study done on a yearly basis. Now, what is a reserve study? Well, the reserve study is basically an in-depth inspection and analysis, usually performed by a third-party engineer. The engineer or the engineering company comes on site. They inspect all of the common elements. They also do a physical analysis of the community, as well as a financial analysis based on the funds currently in the association's bank accounts. It's used to gauge the condition of the association's reserve fund in order to plan for a much better budget in the long term. And these studies are extremely important for the association because a lot of these projects impact the common areas. Like I mentioned previously, some of these common areas could be shared roofs, or the community swimming pool, or the tennis court, or the basketball court, or the entrance. And a lot of these projects are extremely costly and require many, many years of planning and saving. Like I said before, it's not only a physical analysis of the association, but also a financial analysis. Should the association be in a position where a lot of these repairs are imminent, but the association does not have the funds in the reserve account to pay for these repairs and these projects, the association can find itself in a pretty deep hole, and can expose itself as well to major liabilities. And these reserve studies should be performed no more than every 2 to 3 years. And why so often? Well, it's because a lot of these reserve studies can quickly become out of date. A lot of things can impact the common elements within the association, not only from an economical standpoint, but also natural elements such as the weather. Natural disasters can cause damage to buildings, to common areas, to property, to even homeowners' personal property within the association. And a lot of these projects can be paid out of a reserve fund. There's a study that was conducted across the United States in which many associations were polled, and it was determined that about 35% of associations do not need to pass a special assessment to capture these additional funds in case of an emergency if a reserve study is performed regularly. And what are some of the consequences for not having a well-founded or a well endowed reserve account? Well, it could have long-term consequences on the financial stability of the association. If this reserve study is not performed regularly, or if there is some kind of board turnover, and the new board is not up to date on the current reserve study within the association, they're going to be inheriting outdated information. This can cause the association to sooner or later run into financial problems. This could mean either postponing projects, delaying projects, calling for special assessments, and all of these can cause major disruptions to a community. And in case you're wondering, in case some of you attending tonight don't know what a special assessment is, it's a one-time charge that is assessed to the members, to the membership within the association outside of their normal recurring HOA dues, in order to beef up and to strengthen the reserve account of the association to fund these future projects. And what can lead to the underfunding of the reserve account, or the fact that there aren't enough funds in this account to cover these major capital expenditures the association will face in the future? Well, the main thing, and it's always going to be a detriment, and we never advise our clients to do so, is for the association to lower their dues. Lowering your dues exposes the association to major financial problems in the future. Lowering your assessments now will not grant the association much financial flexibility in the future. As we all know, we're living in an economic time which we're all experiencing increase in interest rates. Recently, on a monthly basis, almost as often as the Fed is meeting, increased interest rates, inflation, as well as just the economic culture in which we're living at the moment. Prices, as we all know, never go down. They only go up, they only increase. And reducing the HOA's assessments might keep our neighbors happy, might, even put a few extra bucks in our wallet. But for the long-term stability of the association, decreasing these assessments will never allow the association to have that financial flexibility to not only have a deep reserve account, but also it'll prevent them from having the funds to pay for these capital expenditure projects in the future. And a reserve study is normally a plan. It's a plan, like I said before, that is performed by an engineer. They assess the community financially, physically. They can put a lifespan on, for example, the roof, the siding, the pavement, on the common elements, the pool, things that need repair, maybe in 1 year, 2 years, 3 years, as far as 10, 15, 20 years ahead. That reserve study will give the association exact figures as to how much and how often they should be saving money and setting money aside to pay for that project. For example, if new roofs are going to be needed in about 5 years or so, that reserve study will tell the association a very good estimate of how much that project will cost in 5 years, taking into consideration inflation and other variables. And that way the association can begin, from the time they receive the reserve study results, for the next 5 years, they can begin to put money aside into this reserve account to pay for that project within 5 years. And that's something that the reserve study does help. And let's say 5 years comes along, the money was not put aside, the association is going to find itself in a bind. Um, that's that's a very unfortunate position to be in. We have seen many associations find themselves in very difficult situations because they did not plan, they did not budget accordingly. But there are alternatives. Like I mentioned before, one of the main alternatives to bring in these additional funds to pay for these projects is to have regular assessment increases at least once a year. Also, the passing of special assessments, which is a one-time charge. And the last option, or one of the options that is pretty out there, is seeking a bank loan. Now, I'm going to go over some pros and cons of the three things that I just mentioned. For example, budgeting contributions on a monthly basis to the reserve account based on the increased assessments not only helps the association because it's putting money aside every single month for these projects, but one of the cons is that if this is not updated regularly, or at least once a year when the new budget is created for the association, it can lead to underfunding of the reserve account. If this number is not budgeted correctly based on the reserve study, once it's time for that project, it's very possible that not enough was set aside. For the special assessments, some of the pros are that it is a one-time charge. It is billed to everyone within the association, and per board discretion, it can sometimes be broken up into smaller payments. Some of the cons are that some of these special assessments can be difficult to pass depending on the governing documents, the bylaws for the association. It could also lead to lack of payment from some of the homeowners, especially if they're not too interested or they don't care for some of the common elements in the association. And lastly, loans. Some of the pros are that the money can be obtained all at once, usually a little bit faster. The project can be completed a little bit faster, if not immediately. And the main con, as we all know with the loan, is you're faced with loan payments for many, many years to come. And each association has different financial needs. Each association approaches it in a different way with the advice of us, the management company. And it is taken case by case, depending on the financial flexibility, and also the composure of the membership within the association. Usually, if there's not a delinquency problem, there aren't many homeowners that are behind on their dues. It could be a little bit easier to pass a one-time special assessment because you're hoping that these homeowners understand the severity of the project, and they can pay these one-time special assessments. On the flip side, if there's an association that has a severe delinquency issue, let's just say 50% or greater of the membership are behind on their dues, it might not be best practice to pass another assessment charge, another special assessment, because it's very likely that this also won't get collected. In that case, it's very likely that the association might need to seek a loan from a bank. We've already discussed some of the mistakes that can be done from the association's perspective, particularly and mainly from the board of directors, which is to not increase assessments. We all know the economic times in which we in, prices are only going up, insurance prices go up, your landscaper might charge a new fee next year. Utilities are either stagnant or they increase marginally year over year. Management fees tend to increase regularly as well. So all these things taken into consideration, there are very little arguments as to why a board of directors will not pass an assessment increase every single year. It doesn't have to be a substantial increase of 50%, or if you're paying $100 a month, bump that up all the way to 500. But incremental increases will cover the cost of rising expenses year over year. And that way the association is not operating on a net loss. The other big mistake, like I mentioned before, is not having a reserve study done regularly. I hope that everyone was able to catch some of the pros, well, a lot of the pros of having a reserve study done regularly, and what are the cons to not having one. If anyone joined late or didn't catch what I mentioned previously, the webinar will be posted on our website within a few days or in a week. And we're coming to the conclusion of my bullet points, and I'm going to open it up to you guys in a few minutes. But let's just quickly go over the three main goals that we discussed today. What are the reserve accounts? What are they used for? And what is the purpose of a reserve study? So just to recap, the association reserves are funds that are set aside from the association's main operating account, and these funds are transferred to a secondary account in order to finance future projects within the community. That also answers the second question as to what they are used for, and why is it crucial to have a reserve study performed regularly. The reserve study is a blueprint for many years to come of what the major projects and expenses are within the community. This reserve study is performed by an engineer. They come on site. They also get a high-level overview of the association's financial position to see how much the community has to put aside for many years to come in order to finance those future projects.
Okay, so as far as the reserve study, I assume, there's a vendor list that Ardent can provide, but I also would guess with all the information that's kind of brought in from the various communities, there's a pretty good idea of if you have 20 homes and there's no pool, kind of what that number should be. So is that something we can also get a ballpark before going full on reserve study to get the specifics of each individual community?
I'm not sure I get your question, but are you asking about getting a ballpark as to the cost of a project or the cost of the reserve study?
Really, so, because this was something I'd asked with our manager at one point. So we have 20 homes in the community. It's pretty small. So, I mean,
Right.
I would just assume that you are sourcing lots of communities where there would be kind of a number that's saying if you're in a community of 20 homes and you're 10 years old, you should have 35,000 in the reserve. Like, is there some just consistent number that they are pulling from, or are we needing to go specific?
It's pretty specific based on the community and what the common elements are, what the common areas are. I can probably share with you after the call, maybe like, a ballpark number as to how much a community of your size should have in reserve accounts for the next 5, 10, 15 years. But it all depends on the physical condition of the association and what possible future projects would be needed within your community. I would assume, without mentioning names, a community of that size that would be relatively small. I'm sure you probably don't have too many common areas. And if you do, they're probably not too large. But either way, each association, whether they're small, whether it contains 500 single family homes, each community needs to have money set aside in a reserve account.
Hey, I think you thought this might have been the question before. It's a question I actually have is, what does a study usually cost? So if I can go to our community or our board or whatever, say, hey, we need to get this done, because I don't think we've ever had one done. And we've been around for almost 10 years. So just an idea of what the typical cost is for a study like that.
Yeah, so that's an excellent question, Michael. So there are two types of reserve studies. We would never recommend the first one, but it is always an option. It's a reserve study in which an engineer never comes on site. They usually base their analysis or provide an analysis based on just financial documents, as well as a lot of pictures and just information provided from the board and the management company. This is usually less than $1,000. It varies from engineering firm to engineering firm. And then the one that we would always advise on is an on-site physical inspection. This one can cost roughly about, I don't know, anywhere between 1,500 to 2,500, depending on the size of the community, the scope of the inspection, the number of common areas and common elements found within the association. But that would be a ballpark figure for the cost for the association for reserve study. Hello there. I'm so terribly sorry. My internet disconnected and completely kicked me off of Zoom. Okay, I think Michael, you had asked the question about how soon can a reserve study be requested and performed. I don't know the specific based on certain engineering firms. And I also don't know the backlog or how busy they are this time of year, especially being in budget season for most management companies and most associations at the moment. The fall is usually when budgets for the next year are being created. So I would say you should have a response from an engineer within a few days once you send the request. But how soon they can get on site would vary based on the firm and their availability. Okay, well, thanks everyone for joining the webinar tonight, and I hope you all have a good rest of your evening.